I think new highs are possible this year. I mean, one reason is, companies have proven themselves to manage through shocks, and I don't think investors give them enough credit. That happened with COVID. Companies survived. Companies survived a bullwhip effect on the economy. They survived a surge in inflation. They survived the Fed hiking at the fastest rate ever. So I think this tariff shock, while it is shocking, I think earnings will probably outperform expectations. I mean, that'd be one thing. And then I think the things that were leading us down, whether it's Tesla or the Mag 7 or Bitcoin, they've begun to recover. In fact, as you know, Bitcoin's above its April 2nd level. So Bitcoin, I think, is telling us the S&P should recover towards the 5,800 level in the near term. And that's still upside from here.
Tom Lee sets the stage. As of early May 2025, financial markets are finally showing signs of stability after a turbulent stretch that began in April. According to Tom Lee, there's a major shift happening. The macroeconomic environment has significantly improved in just a few weeks. Why? One key reason: tariff expectations are now much clearer and surprisingly more favorable, giving markets a much-needed boost. Before we dive deeper, make sure to hit that like button, subscribe, and turn on the notification bell so you never miss an update on market trends, crypto insights, and the evolving world of digital assets. And don't forget, we want to hear from you. Drop your thoughts, reactions, or questions in the comments section below. Your engagement doesn't just help the channel grow, it helps us bring you better, sharper content every week. Thanks for watching, and let's get into it.
I do think tariff fears can come back, but the stock market and I think the macro is in a better place today than it was on April 7th. One is I think that the tariff expectations, even if we don't know what they end up looking like, are really much better than what we saw on April 2nd. The second is that the markets that lead stocks, such as credit and the VIX and high yield, are in a much better place. High yield has recovered almost all the widening that happened since April 7th, and the VIX is uninverting the term structure, which basically means the market for volatility is calming down. And then I think when we look at 2026, I think there is stuff to have some confidence about because the economy is holding up better at the moment. And next year we can look forward to deregulation. I think the comparisons for earnings will be much better for next year. And then, of course, if we get some tariff policies that lead to exports, we have upside to earnings growth. So all in all, I think it makes sense that the markets have recovered to this point. But, the bar for recovering to all-time highs is, of course, higher. But I do think the risk reward is actually still positive here.
Yeah, I was thinking that too. You're probably thankful and gratified that we're back to where we are, but it just seems like there's some backing and filling that's going to be happening before we break out to new all-time highs. Do you think with the tariff regime as it is, some of the comments made by President Trump over the weekend that why would, if these are temporary, why would anyone build a plant here? So that some of them might be permanent. I still think it's negotiating. I'm still not sure I take that at face value. But if it's a permanent regime of tariffs, you still think we get to new highs in 2025 or by 2026?
Yes, I think new highs are possible this year. I mean, one reason is, companies have proven themselves to manage through shocks, and I don't think investors give them enough credit. That happened with COVID. Companies survived. Companies survived a bullwhip effect on the economy. They survived a surge in inflation. They survived the Fed hiking at the fastest rate ever. So I think this tariff shock, while it is shocking, I think earnings will probably outperform expectations. I mean, that'd be one thing. And then I think the things that were leading us down, whether it's Tesla or the Mag 7 or Bitcoin, they've begun to recover. In fact, as you know, Bitcoin's above its April 2nd level. So Bitcoin, I think, is telling us the S&P should recover towards the 5,800 level in the near term. And that's still upside from here.
Yeah, that was another one of your calls, that it would catch up with gold, and it's lagged in the past. What about some of your good calls or accurate calls, Tom, have been based on inflation? And it's a real sort of a push and pull between what we're worried about with tariffs, which would theoretically restart inflation, even if I don't know if restart's the right word. Maybe there is some still left in the pipeline. But oil, I just always think that the most important factor in inflation, which ripples through everything, is oil. And you look at oil, and I think that could counteract a lot of what we see from, maybe even not only offset the tariff inflation, but actually be more important. So what's the Fed do?
Well, I agree with you, Joe. I mean, the two leading indicators for inflation should be, like you said, commodities, and oil is telling us inflation is weaker. And the labor market, the JOLTS data shows the job market's not that strong, so there's not really a wage pushing inflation. And I think the inflation data recently shows inflation is tracking lower than expected. The Fed has been on hold, and they're saying they're waiting for tariffs. But what's interesting is the ECB has been cutting rates, even though there's tariffs, inflation hitting Europe, or soon to hit Europe. The reason is ECB's inflation measure, the HICP, exclude shelter. If the Fed excluded shelter from its core inflation calculation, it's lower than Europe now, and yet Fed funds is over 225 basis points tighter than Europe. So I can actually sympathize with the argument the Fed should be cutting now, even if we don't know the effects of the tariffs.
Even if a government, including one as powerful as the United States, wanted to shut down Bitcoin, it would face an impossible task. Disabling the network would require locating and turning off every single device running a Bitcoin node scattered across the globe. In practice, that's simply not feasible. History backs this up. Attempts to alter Bitcoin's core protocol, like Bitcoin Cash and Bitcoin SV, have largely failed. Why? Because the market consistently chooses decentralization and neutrality. Any effort to control Bitcoin undermines the very qualities that make it valuable. Tom Lee emphasizes another layer, the game theory behind Bitcoin. Instead of trying to destroy or ban it, nation-states have a smarter option: join it. Participating in the network offers far more strategic advantages than attacking it. Let's go back to the video.
So the way Bitcoin works is the rules are enforced by anyone that wants to download and run them. And so it actually would be fairly difficult, if not impossible, for even if Trump were to come out and say, turn all those off, what are we going to, you'd have to go in every individual home, find every individual device that decided to download and run this software to actually change the rules. What we've seen is when people change the rules in Bitcoin, they just create different versions of Bitcoin. So you've probably heard of Bitcoin Cash, Bitcoin Blue, Bitcoin Wood, Bitcoin Sky. And these are just versions of Bitcoin where someone wanted to change the rules to maybe benefit themselves. And those things actually trend towards zero. The value is in an apolitical neutral money. And so by even trying to change the rules, you destruct the very value of the network. So I'll say that. To your other point, though, of why someone would want to do that, there's actually game theory design in Bitcoin where you're incentivized to act in the best interest of the asset. People often say, what if a nation state accumulates so much energy where they want to 51% attack Bitcoin? We've actually seen governments and nation states actually, instead of 51% attacking Bitcoin, they just start mining Bitcoin because it's a way better idea than double spending my transaction when I bought pizza, just mining a ton of Bitcoin because it's valuable. So there's actually a game theoretical element to Bitcoin where you're incented to act in its best interest because you get paid to. Like, why would you destroy a $2 trillion network instead of just buy it and grow it to 4 trillion, right? Why would you attack a network by double spending one random transaction instead of using all this energy that your country has access to and just mining a ton of it and paying off your debt? So you're right in that it's very counterintuitive to find the incentive structure for someone to attack Bitcoin because it's in their benefit to adopt it. And even if they were to attack it, it's very unclear to me how they could do that successfully at any scale. Oh man, I think for me, Bitcoin has been a education vehicle for money more broadly. And maybe my belief in initially what I thought maybe made Bitcoin valuable, and I saw Bitcoin as a competitor to PayPal. And when I realized that, Bitcoin is competing in the free market of storing humans' time and energy and allowing us to exchange and price our collective efforts, and just what money as a technology has brought to humanity, allowing us to hyper specialize and exceed something like barter. That is something that when I was an 18-year-old kid and getting into Bitcoin, I had no idea the profoundness of money and how important a hard money was to a functioning society, which now it's a guiding principle in day-to-day decisions I make about myself. So I would say my understanding of money, Bitcoin, I owe that to Bitcoin. For sure. You know, the opportunity in the market that we saw is there's a lot of really small cap, small size businesses that we don't think are institutional grade or can represent Bitcoin in an institutional capacity. And that those are maybe not the micro strategies of the world. And so we wanted to bring blue chip credibility in initial size. So we're coming to the market with billions of dollars worth of Bitcoin, a lot of capital behind us in partnerships, access to Wall Street, a lot of experience. We know what we're doing. But then the startup upside is that, you know, we didn't see anyone take this Bitcoin treasury opportunity and actually build products. All we've seen is people just buying Bitcoin. And as Bitcoin technologists and folks that have contributed to the protocol and helped build this industry, we know where the high margin, high growth opportunities are. We know how to scale and build this technology. And so we're very excited to take access to the capital markets and to our Bitcoin treasury, which is a unique asset on our balance sheet, and actually build and extend beyond just owning. And we think we're very unique in a pure Bitcoin play that's going to bring both technology and access to capital markets and accretive Bitcoin per share growth. So I think what everyone should know is that what we announced was a filing and an intent to go public through a SPAC merger with Cantor Equity Partners, but that has not been approved. And so what we consider our first product is the equity itself. And so we're very hopeful to launch that first product on a stock exchange, and that's the ticker XXI. But that has not been approved. And so really a lot of my job today at 21 is both working with regulators and partners upon that approval process and trying to educate everyone on the business and get XXI listed on a stock exchange someday. And then also coming and hanging out with you two lovely people and educating the world on why Bitcoin matters and why what we're doing is different and we think really powerful for those in capital markets that want to participate in Bitcoin.
Jack Mallers opens up about his personal journey with Bitcoin, a path that started with curiosity about digital payments and led to a profound understanding of what money free really is. To Mallers, Bitcoin represents more than just a currency. It's a vessel for storing and transferring human time and energy, a monetary system that unlocks specialization, innovation, and economic growth far beyond what any barter system could offer. He wraps up by sharing exciting news about his company, 21, which is preparing to go public through a SPAC merger. The mission? To build an institutional-grade Bitcoin platform that bridges deep technological expertise with capital markets experience, bringing serious infrastructure to the future of digital money. Want more? Check out our other videos covering cryptocurrencies, blockchain developments, and market analysis. And don't forget, we want to hear from you. Drop your thoughts, reactions, or questions in the comments section below. Your engagement doesn't just help the channel grow, it helps us bring you better, sharper content every week. See you on next video.